that this session is being recorded. All right, I'll go ahead and begin. I was waiting for a couple stragglers to make their way into the webinar conference room. It looks like they are on their way in. As people do trickle in, again, just a couple words of housekeeping. The webinar is being recorded. Using your control panel on the screen, you should be able to ask questions using the chat feature. Feel free to do that. Any substantial questions, if they come to mind, feel free to go ahead and punch them in, and we'll set some time aside toward the end of the presentation to go into those in more detail. Right now, though, let's go ahead and kick things off. We want to be respectful of everybody's time. So again, good afternoon, everyone. Welcome to Azzad Asset Management's webcast titled, Is the Fixed Income Bull Market Over? Exploring Emerging Market Alternative Investments. As the title explains, we're here today to talk to you about three big questions on the minds of investors. The first, are bond markets fully priced after a 30-year run? The second, how can you position your portfolio for potential volatility in the coming months and years? And thirdly, how might diversification to alternative fixed income help with that? So let's go ahead and get started. On your screen now is the agenda for the day. We'll deal with each of these three questions that I just mentioned, each one representing a section of today's presentation. In addition to talking about the bond market and volatility in general, we'll spend time on how you can position yourself for that volatility. As fixed income markets adjust to quantitative easing policies overseas and a rising interest rate environment here at home, we think that liquid alternatives like the Azzad Capital Fund, which we'll talk about soon, can serve as a nice hedge against some of that uncertainty. Finally, we'll also show you a little bit more about the strategy that we use, again, the Azzad Capital Fund, which is our halal alternative fixed income product, and we'll also talk a little bit about why you should consider that as a core holding in your portfolio. So let's go ahead and meet the lineup. Your presenters for today, on the left, Mr. Azzad Philosophy, the head of international fixed income investing at Federated Investment Management Company, broadcasting live today from Pittsburgh, Pennsylvania, at Federated headquarters. Ihab is also the portfolio manager for the Azzad Capital Fund. Federated serves as the sub-advisor for that fund. Ihab will be joining us momentarily to talk a little bit about the bond markets and also give us some insight into their inner workings. And I'm Josh Brockwell, there on your right, Investment Communications Director here at Azzad. I'll be your host for this afternoon. Quick word from our sponsor, slide 5. To give you some background on Azzad, we're a boutique registered investment advisor located just outside Washington, D.C., broadcasting today from our offices in Falls Church, Virginia. As I mentioned, we're an RIA registered with the SEC. We sponsor 2 halal mutual funds, one of which is that Azzad Capital Fund, which we'll be talking about a little bit later. We'll cover that. We also sponsor managed model portfolios for institutional and retail clients. Moving right along, slide 6, the Azzad Philosophy. So at Azzad, our mission focuses on generating competitive long-term financial returns while also using investment capital to promote a sustainable economy and a positive social impact. Our vision is a world in which investment capital helps to build a sustainable and more equitable economy. All of our products and investments comply with halal investment guidelines as outlined by the Accounting and Auditing Organization for Islamic Financial Institutions, also known as AOFI for short. This means a focus on quality investments with healthy balance sheets. This also means securities with little to no debt and also no interest-based transactions. As you'll see on your screen there, we're also a member of the Forum for Sustainable and Responsible Investment. So, without further ado, let's turn to our first question. Are bonds fully priced? And with that, I'll turn things over to Mr. Azzad Philosophy at Federated Investment Management. Ihab?
Thank you, Josh. Yeah, if you could look at the next slide, which is slide 8, that's probably why a lot of you are here today. The concern about a change in monetary policy in the U.S. We basically had loose monetary policy for the last 6, 7 years or so, and the market is concerned what happened if the U.S. rates begin to rise. So to put it all in perspective, we have a chart here that gives you the U.S. 10-year over the last 10 years, or the yield on the U.S. 10-year over the last 10 years. And what you can see that there's been a consistent downtrend in yields for the better part of the last 30 years or so. So it seems that that downtrend is about to end. Once we hit that 1.5% to 2% level, the market seems to be a little bit sticky. And a lot of people think that this could be, again, the end of this bull market and that rates can rise, and could rise a lot and very fast. At Federated, we really don't think so. While we do believe that rates will rise, I mean, your U.S. growth is obviously improving. It's not where we were a few years ago. Employment data, anything you look at will lend itself that rates should begin to rise. But the idea that you have significant rate rise is not something that we think will happen. You will have higher rates, but the factors that are in place now that have led to a lot of this downtrend in yield can continue to be in place, whether they are inflation, global demographic changes, all those factors are still in place. So rates will rise. We don't think they're going to rise significantly, but the market seems to be kind of priced, not really priced for that at all. So everybody knows that the Fed is probably going to raise rates either in June and September. It's not a matter of if, it's just a matter of when. So what happens when rates rise? If you go to the next slide, slide 9, that gives you an illustration of what happened when rates move up. This is the 10-year Treasury, so that's the rate that everybody's familiar with. So that you can see from this chart that even a small rise in rates, let's say only 25 basis points, a quarter of 1% in the 10-year yield, your return for that year is gone. You go from 2.2% return, which is essentially the yield on the 10-year now, to practically zero. And even a modest increase in yields, so 50, 75, or even 100 basis points, can have negative effects. So even a 3% yield on the 10-year, you're going to be down about 3.5% to 4% in return. So what do? How do you protect yourself? How do investors protect themselves against this eventual rise in rates? The next slide gives you an idea what investors do in terms of asset allocation and diversification. Very powerful tools. This is what really investors should be focusing on. This is a very busy chart, and with a lot of colors, but the idea here is that you have a lot of different parts of the global fixed income market, whether it's U.S. credit, emerging markets, U.S. investment grade, high yield. No, we don't have high yield. We have U.S. government, corporate bonds. We do have high yield, actually. But you can see here that not every part of the asset class wins every year. It shifts around. There's always, it's not always the same type of part of the asset class that moves up. And some years, for example, like 2013, when we had the taper tantrum in May and June, practically all fixed income assets went down, with the exception of one. But the main thing to see as well is that through that whole period, the Azzad Wise Capital Fund had a positive return every single year, even in a year like 2013, where most parts of the fixed income asset class actually were down. So that's a way to protect yourself, diversification through asset allocation.
Okay, Ihab, thank you for sort of setting the scene for us and giving us a little more insight into the historical trend of bond markets. As that line graph showed, the bond market's been a little choppy over the last 3 decades, as you pointed out, and the potential impact of a rate hike could mean maybe some dramatic volatility for bonds going forward. Who knows? Can we talk a little bit about ways to mitigate that, sort of piggybacking on your comments about diversification a little bit?
Yeah, it's really applying the same principles we just discussed from the whole market perspective. You do the same thing here. To get through sector allocation, you get diversification. So one of the best ways to mitigate risk is to have different assets, alternative assets in a portfolio that generally have lower correlation to each other. If you have that in place, you're more likely to do well in periods of high volatility. The Azzad Capital Fund, that's what we have. We have a variety of different alternative fixed income investments in the portfolio that give you good diversification, good yield, investing in the U.S. as well as in global bond markets.
Okay, so let me point out to everybody that on your screen right now is a rundown of the alternative asset classes available to you through the Azzad Capital Fund. I was hoping you might be able to sort of quickly walk us through these one by one, sort of briefly. First, if you want to handle the subject of Sukuk, take that on, how they're sort of structured and maybe different from their more conventional bond counterparts.
Sure. The Sukuk market is sometimes called the Islamic bonds. It's actually a huge market. It's a 200 billion plus market, and it's simply put, it's instruments that are bond-like that can give you this diversification, but not necessarily with the same performance in periods of volatility. For a number of reasons. I mean, you have an asset that tend to be owned by investors that are much more buy and hold investors, so they're not buying and selling all the time, creating that volatility in the market. And at the same time, you have an asset that, because of certain features in that asset, it can't be really shorted. So you don't have any kind of hedge funds playing in that market. So it's a much less volatile bond market-like instrument.
Okay, thanks. And I think Islamic bank deposits are next on that list. Do you want to maybe quickly elaborate on their structure and maybe some of their alternative characteristics?
Yeah, Islamic bank deposits, when you invest with the bank, you're basically putting your money in the primary market. Islamic bank deposits, again, are kind of equivalent to CDs, but you get a good return while investing your money and sharing in the profit and loss with the bank that goes out and invests in different projects as your agent on your behalf of us as the shareholders. So again, it's a CD-like instrument that has good return with much lower volatility.
Okay, and anything new on the horizon? You want to briefly talk about some prospective asset classes in the fund?
Yeah, we're always looking for new asset classes to add in the fund to continue to give us good return and add the diversification and lower the volatility of the fund. One of the things that we've been working on at Federated for the better part of the last 5 to 7 years now is trade finance. As it's applicable to this fund, it's Murabaha trade finance. That's essentially financing goods transfer between different parts of the world. That is an asset class, again, that's not really used by too many funds out there. It's a low volatile asset class with very solid returns. We're just about to begin to do that in the funds. We actually have just committed to our first transaction.
Great.
We're also looking at ways to reduce our interest rate risk. So there is a way to do that by using profit rate swaps. This is a way to, again, to hedge against rising rates in the U.S. Not that we think they're going to rise significantly, but if they do, hopefully we have a tool to mitigate that risk.
Okay. Thanks for that. Let's take maybe a closer look at the fund's characteristics, performance, top holdings.
Sure. This is the next slide. This is the performance of the fund and the top holding at the end of 2014. As you can see, the fund is well diversified. The primary focus of the fund is capital preservation, and the secondary focus is income. You want to preserve your capital and give you good income. So through the diversification that you see in bank deposits, in Sukuk, trade finance shortly, and so on, we're able to give you that good return without the volatility that you see in the erratic market sometimes. this is what investors can use to increase this diversification. Capital preservation and income, that's our goal.
Perfect. And so we wanted to make the argument here today that the Azzad Wise Capital Fund, ticker symbol WISEX, that you just introduced, can be used to create a unique risk-return profile for a portfolio using those alternative investments that you outlined just a minute ago. With these next few slides, I'd sort of like to get your perspective and sort of your commentary on how the alternative products that are available through the Wise Capital Fund can help achieve that objective of diversification. So let's talk a little bit about some real-life examples, I guess, sort of putting the fund through its paces. Moving on to slide 15.
Yeah, nothing really shows that better than the actual performance of the fund. So if you look at this slide, the blue line that you see, that's the monthly performance of the fund since its inception in 2010. So, and the other lines that you see are markets that we actually invest in. So it's the Barclays Ag and the JP Morgan Emerging Market Fund Index. So as you can see that for the life of the fund, even in a very volatile period, the fund, again, that's the blue line you see, had much lower volatility than the bond markets that we actually invest in. That's through the diversification that we just described.
Right. And another example of WISEX and its historical performance, slide 16.
Yeah, this is downside risk. So this is what happens when markets sell off. How much does your portfolio sells off relative to those markets? So again, here we are this blue line that you see. And you can see, again, since the inception of the fund, when markets go down, again, these are the markets that we invest in to a large degree, a large part of the global fixed income market. The Azzad Wise Capital Fund tend to have much less volatility and much less downside risk. Minimal downside risk, consistently lower volatility than the bond markets we invest in. Again, diversification is the key.
Okay, great. And slide 17, a real-life example during some recent volatility we had.
Yeah, this is a really good example. At the kind of the end of the third quarter, beginning of the fourth quarter of last year, we had a lot of volatility in the bond market. And again, these are the same two bond markets we've been using for the previous examples. And you can see how much they went down. I mean, some of these markets were down. You know, I mean, this is even intraday would be more than that. But the markets were down 2% plus during that entire volatile period. If you just look at the blue line, which is again the Azzad Wise Capital Fund, we hardly had any kind of downside risk, and we maintained very stable NAV.
Okay, perfect. So with that, let's take a second to talk about correlations. The slide on everyone's screen now will show how the Azzad Wise Capital Fund diverges a little bit from bond indices, specifically JP Morgan Emerging Market Global Bond Index, Barclays Ag that you mentioned, in the B of A Merrill Lynch 1 to 3 year, which is the fund benchmark. The fund generally shows low correlations against conventional fixed income. You want to comment on that?
Yeah, because of the asset mix we have on the fund between, again, bank deposit, trade finance, and sukuk from many different regions of the globe, different type of economies. When we put it all together, you tend to have much lower volatility and much less correlation to the fixed income, to the global fixed income market as a whole.
Perfect. Those are some pretty powerful numbers. And so I'm going to open it up to questions from our participants in just a second. And of course, as the presenter, I want to take the prerogative to go ahead and ask one of my own. So while everybody's thinking and typing, if you do have any questions, go ahead and use that chat function on the control panel of your screen for GoToWebinar. Yeah, I'm going to ask you a question, just kind of a toss-up, or very quickly, kind of an open-ended question, I guess. Federated Investment Management Company, your firm, you have one of the biggest players in the fixed income space, a sub-advisor to the fund. I know you took over the day-to-day management of the portfolio about a year ago, I guess, going on a year. It'll be a year June. Can you give us kind of some thoughts on your first year managing the fund?
Sure. One word: exciting. It's actually been a very good experience. It's great to have a vehicle that you manage through periods of high volatility. 2014 again was a high volatility period for the fixed income markets, and to actually see the theory work. So you have a fund, volatile periods, the fund does really well. The fund has less volatility. It performs well. It beats its peers. It becomes, not just this is the entire short duration peer. I believe we were in the top decile last year among that category. And from a personal side, I actually expanded my knowledge more on Islamic investing, on the Sukuk markets. I've been investing in the Sukuk market for the last 15 years, but now I've got much more in depth into it, and it's been a very gratifying experience.
Excellent, excellent. Well, if there are no questions, we can go ahead and wrap up early. I'm going to check the chat feature one more time here. We do actually have one question from one of the attendees. You have, in essence, it says, "This seems to be the only fund of its kind thus far." The question is, what factors have prevented other funds with this type of strategy from coming to market? And there's a follow-up, but I'll go ahead and let you answer that one first.
Yeah, sure. First, it's not easy. I think Azzad had a very hard time putting this fund together. It's not something that you could put together very easy. But also the experience and the knowledge in this asset class is much more limited. So people don't know Sukuk investing, don't know the Sukuk market, especially people in the U.S. People don't have too much experience managing an Islamic fund with certain guidelines and so on. So I'm glad that Azzad formed the fund, and I'm glad that I can help manage it.
And we're glad to have you. The follow-up, or the second part of that question, you have, how have Sukuk and other Islamic finance vehicles performed in liquidity crises, such as the one that we saw in 2008?
Actually, through that crisis and a number of the other crises as well after that, you had, they're smaller by relative comparison, whether it was Greece or issues more recent in Ukraine and Russia and so on. During any of these kind of mini crises since then, and including 2008, the Sukuk market actually performed exactly as we had expected. I can't say it didn't go down. Yes, it went down, spreads widened, but significantly less volatile than the rest of the asset class. So again, as expected, less volatility from the Sukuk bond market.
Okay, great. Also, we have a question about the return in comparison to the market. I'm not sure which market the questioner is referring to, but if you want to go ahead, maybe you have and comment on sort of the bond market, the whole benchmark.
Yeah, the space that we compete in is the short duration market, so basically the 1 to 3 year area of the curve. This is what people tend to want to be in when capital preservation is their top priority with some income. Within that universe, we actually performed very well. Again, this is I don't know how many funds are in that universe. Josh, you know better than I do, but hundreds and hundreds of funds. We've been in the top quartile pretty much consistently. The fund has for its life, and last year, Josh, you can talk about the Lipper award that we won as well.
Yeah, I think what people need to understand is that when we're talking about the Azzad Capital Fund, it's a short-term bond fund according to Morningstar, right? So we don't want to compare it to some of the kind of high-flying equity funds out there, because that's not the objective of the fund. As you had mentioned earlier in the presentation, we're looking for capital preservation and then secondarily income. So compared to other funds in that universe, and as you had mentioned, there are a few hundred, we're talking about stellar results for our fund, and so we're pleased with that. And Federated has done a great job in helping to make that happen. So, and as you have mentioned, we've gotten accolades and recognition from third-party groups showing that, which is very gratifying. So in 2014, last year, the fund won Lipper Fund Award for Best Global Sukuk Fund for the 1 year period. So that's that's a very gratifying type of reward. We don't do it for the accolades, but it's also nice to get some of that from those groups outside, those fund rating agencies and such. So I also got a question here, Ehab, about obviously we don't discriminate on the basis of shareholders. So people of all faiths and no faith at all are welcome to invest in this fund. We won't go into too much detail on that. We also had a question about Azzad's Sharia compliance board. Yes, we have one. It works in parallel with our sort of conventional compliance. I'm happy to talk more about that offline. We can go into more detail. I'm happy to provide that information. You can reach out to us using that contact information you see there on the screen. Anything else before we wrap up? We were trying to keep it at about half an hour. There was a question about fund availability. So obviously the Azzad Capital Fund can be purchased direct from us. We're also available on most of the major brokerage platforms. So your Schwab's, TD Ameritrade, Fidelity, E-Trade, Scottrade, etc. So with that, I think we'll go ahead and wrap it up. And we pretty much did a half hour flat, which is great. I'm going to go ahead and show you some disclosure information there, which our compliance legal department likes us to do. And we'll also conclude today's presentation. Thank you again, Ehab, for your time. Thank you, audience, for your time. I want to remind you to visit our website, www.azzadfunds.com, where you can download and read your copy of the prospectus for the Azzad Capital Fund. It contains more information about the fund's risks, expenses, and investment strategy. While you're there, while you're on our website, you can also sign up to receive our monthly e-newsletter. A new version or new issue just dropped today. It's also on our website if you're interested in checking that out for March. But if you sign up, we'll go ahead and send those out to you on a monthly basis so you don't have to check back. As well, I want to mention that you can follow us on Twitter. @AzzadFunds is our handle. Also like our Facebook page, facebook.com/AzzadFunds. And let me also note that a recorded version of this presentation should be up on our YouTube page very shortly. That address is youtube.com/AzzadFunds. So be sure to take a look. And we'll also plan on sending out the recording today via email to those who registered. Thanks again, everybody, for your time. Ehab, thank you for joining us today, and thanks for that insight. Take care, everybody.